All right, you guys, I just want to go over in real time because the market's still open to show you what I was talking about in the last video. And so as we look, the SPY today did what I was talking about. It broke this 50 moving average, EMA, okay? And when that happens, it signals to all the AI, all the algorithms to buy, right? Now, and you can see what happens is the VIX did pull back. Okay, so this gives some momentum to the possibility that it remains above the EMA. Okay, the VIX TLT. If you go and look at that, look at what happened with TLT. You can see it gapped up, which gives you some validity to this rally. Okay, so if you're wondering how to spot a fake out, if this is to hold, then TLT needs to continue upwards. Okay, if and you can see the dollar, like I talked about, the dollar was here yesterday, it came all the way down, and look, it's right at its 50 EMA. All these targets are lining up exactly as I talked about. This the yen, actually I thought the yen might come down a little further, but the yen is holding right here. And then look at this, just as I talked about, the British pound right here at this top. So what we're looking for now is you need to see this trend continue. So I talk about continuation pattern, okay? Because what you're could be seeing is just this kind of a double top pattern, and then you stay stuck in this range. So people in the Bitcoin world are going to get bullish today. And I said this yesterday, that you're going to see all these videos of Bitcoin has put in a bottom. So what you can see is that Bitcoin pumped 5%. It smacked right into this gold box that I have and stopped. Okay, I mean, you can see, let's zoom in, how accurate is this gold box? It is within 20411, 20437, within $20 calling the price of Bitcoin. So the idea here is that what you're looking for is a continuation pattern, right? And so you do have something setting up that could cause this to continue higher. And a lot of technical traders will start calling for a breakout because they're technical traders that only know horizontal supports, Fibonacci sequences, and things like this. And in the bull market, that was something that you could use, but you are in a different market now. You're in a bear market. And so when we look at TLT, and I want to show you one more thing. You see the TNX, I've been talking about this. You see the pullback? That gives some credibility to this move that you're seeing today. But this could play out and retest, okay? And so what moves the market? Going back to this fundamental idea that if you're to see a breakout, then you need to see these patterns continue. You need to see this continue downward. You need to see the TNX has to come down, and for it to be a sustained, prolonged, let's say, 3 week to a month kind of move here, you're going to need to see this pull way back, okay? In the short run, by the end of the week, if you see this pull back, you'll probably get more upside. TLT, same thing. If you see TLT start to sell off here, okay, TLT starts to come back down, that's going to pull the energy out of this little bounce you're getting today. Okay, so you keep an eye on that, and you're looking for the continuation. Now, what moves the market, right? So how to trade this and what I see. Okay, so this is my idea, and this is exactly, if you watch the video, I said you'll see one of these big pumps. My idea, what I believe we're going to see, is this at the end of the week is going to be a wick, and you're going to come back down to these levels. And the reason is, today at close, what you have here is a very probable short squeeze, because 40% of the S&P is going to report this week on their earnings. And today you have Google and Amazon, Intel, major chip makers, major a lot of the market cap of the S&P is all reporting today. Okay, and so if Google, if Microsoft, if one of these companies comes out with negative earnings, that's a grim reaper. That's going to take this whole little bounce that we see here, and it's going to pull it right back down into this range. And then depending on how bad the news might be, it's going to pull it back down in this range. So you can't just trade these levels in a bear market. You can't, those days are over. You have to understand what's going to move the market and why this is moving today. It's because Google's reporting and Microsoft and Amazon, and these markets are going to move on volume, right? So why would I be more bearish on this scenario? One, you have the Forex, which is the currencies that have been devalued in this quarter, and those payments have to be made in US dollars, and you can see the pound against the dollar was way down. May not have as much effect this quarter as it will next quarter, but something to keep an eye on. Google, Amazon, these companies all still operate on debt, believe it or not, and debt has become more expensive. And so what I've noticed is with these earnings is that they don't give further guidance in the future, which they did in 2020, and it did hold the market up. And so you may not see a sudden crash, but you may see a loss of momentum. That's what I'm pointing out here, is this is a momentum move with volume. In order for this to continue, you're going to need some sound financial news to come out, something that says this is genuinely turning around. Otherwise, you're not getting anything more than a short squeeze on the S&P this week. And so I just wanted to give you the update because the market's getting ready to close, and I wanted to show you how this played out. And so it is possible that this turns into something more, but the probabilities, just playing off of risk, is that on Sunday you have major escalation happening in Russia. You have China. If you go over to what happened in China, let's look at this real quick. So this is China's. This is the SSE. This is the Chinese composite. You can see they had a major sell-off, and this is because Xi, their dictator over there, rather than deciding to kind of backpedal on the ideas of the zero COVID, so rather than doing something that would be good for humanity, he's basically going to double down on the zero COVID policies. And so their market does not like that, but guess what? Neither does our market, because everything, Teslas, iPhones, all that is being affected, but we haven't seen the numbers come in, right? So in your common sense world, sometimes you go, well, how is this possible? It's because we all know it, but the data's not there. They haven't been able to look at it and go, okay, China has crushed the manufacturing of iPhones because we can't get a certain kind of plastic or a chip or any one of these many things that China manufactures, right? And so they double down on that. That causes China to sell off, which supports this idea that eventually, and it could be a Grim Reaper style event where somebody has to report in their earnings that they've been hurt by this policy in China, which is crushing their economy. So it's very interconnected. And so that's, on this China news, that's kind of a big deal for this week, but the market didn't sell off on it, not yet, right? So that's the idea there. And then let's just check UNG real quick, because I've been talking about this a lot. And so as you can see, UNG hit the bottom. Here's, you're up 8%. So it moves. This is why I'm saying what I'm saying. Look at the move on UNG today. You want to trade something with some high risk volatility and something that can do something for you you got to follow where the money is going to go. Is the money going to flow into Bitcoin? It's not, because you're in a high risk off scenario for the markets, right? And the markets know that we're heading into some sort of an energy crisis. It's all a gamble. You don't know what's going to happen, right? But if you're in this game and you're trying to, leverage some risk, okay, so you've got a 5% move on Bitcoin today, and that's why I said UNG is the new Bitcoin. If you like the volatility, you want to trade volatility, you've got a 7.64% move in a single day. And from the beginning of the week, if you had entered this trade right here, you'd have been a savage, and good for you. But if you nailed it somewhere around this gap, you're up 11%. You're outperforming Bitcoin. You've got to pick up what I'm putting down. This is going to be extremely volatile over the next couple of months. And so, do I wish I had waited a little bit? Sure. But I wasn't the guy who bought up here, right? So you got to look at this and think of, okay, am I too late to enter this? Probably not. This can run wild tomorrow. If this has 3 days to the upside, people are going to pile into this. This is an ETF. They're going to pile into this. And if you have news in the Ukraine, it's such a, to explain this kind of play is hard, but it's like, it's based on strictly news driven, but we have enough information to know that it's a decent bet that there's going to be something over the winter that plays out that's going to affect the prices of natural gas more so than Bitcoin, right? Bitcoin's got more potential downside. This has actual real potential upside. And so things to watch for, which I said in the beginning, would be something with another pipeline, something happens with the war in Ukraine, but also seasonality. So I took a gamble on this back here. I was a little early, depending on how you look at it. Not early. There's a lot of people holding this right here. Okay, so maybe I was a little early, but I absolutely tagged this line, and then I have a second entry right here. So the idea being that with seasonality, this price naturally would go up because people are going to need more natural gas. So I've reduced my risk by just playing off that seasonality. On top of it, if we get a very cold winter, which the Farmer's Almanac just came out with their report for this winter, and it's going to be colder than normal, right? I do a lot of gardening. I understand nature, and that was my vibe, is I could see things cooling off. I pay attention to agriculture and things that other people don't listen to. So I was, in my mind, safe and early. I felt good about that, and I still do feel good about it. But if you're not into this play, then it's something to take a look at, especially at these levels, because this is not, very unlikely does this do one of these. This is very unlikely to do this. It could do that if you have some news. So what to watch out for if you're nervous about entering something long, that can sell off. UNG can break those levels full. What I'm watching out for, if you see the market do one of these, woo, something in the world happens, a black swan event, dirty bomb Ukraine, like they're talking about. If that happens and the market suddenly crashes in a day, then it's going to carry UNG down with it. Although I do believe that UNG would be quicker to recover because people are still going to need natural gas, even if they don't need an iPhone. Anyway, guys, I hope that helps, and that's the update for today.